James, Jasmine, Tim, and Richard. Thank you. Okay, I think, just check if the mics are muted or on. Okay, hold on a second. So I'm here for tech support as well, right? You got to kind of pop these up, and then you are good to go, my friend.
Hello.
1, 2, okay. Okay,
Hello.
do we have, is this mic working? Do you want to have mine? You have mine, it's all good. Great.
Thank you. Welcome, everyone. Thanks so much for coming. Appreciate it's an early start, maybe after all the partying last night. So we thank you, and great to have the whole ecosystem here. I think some great filling in order to get you all here. So thank you all for coming. We're really excited about the panel today, talking about personalized portfolios in crypto. I'm going to introduce you to this esteemed panel very shortly, but just by way of introduction, I'm James Morrick, and I'm co-head of institutional sales for EMEA and APAC at Coinbase. I've been with the firm for about a year and a half, so really looking at growing the institutional landscape within crypto, and it's been exciting despite the fact that I joined from BlackRock and the price has crashed. We've seen no sort of let up in terms of institutional engagement, and it's pleasing to see Larry getting on the stage and advocating for Bitcoin and obviously pushing the Bitcoin ETF. So we're going to dig into a bit in terms of the institutional lens with regards to dedicated portfolios today. And so I'm just going to hand over to the three panelists to introduce themselves and give a bit of background. Jasmine, maybe over to you.
Yeah, sure. So I started first off my career in banking, working on trading floors, crypto derivatives, fixed income derivatives, etc. Moved to the buy side, so a lot of fund creation, thesis in terms of like coming up with prop trading ideas that will benefit pension funds and all of your pensions. So I worked at Brevin Howard as head of risk there in US, spun that out and moved all their infrastructure to become more serverless, AWS cloud, and then used that as technology to avail other people wanting that infrastructure. And through that, I had 5 crypto clients, and there were no issues at all with any of their books and records, settlement, reconciliation, and anything. And I was like, oh my God, this is just so much easier. So instead of watching other people do it, I thought I'll get my hands dirty and join a company called One River Digital, which was acquired by Coinbase because we were able to navigate quite a lot of the headwinds over the last 2 years with very thorough due diligence. So we passed their benchmark and are very happy to be part of the family now.
Hello. Hello. We at Hilbert do a quite specific thing within the crypto ecosystem. Back in late 2016, our team of quant PhDs sat down together in a room and asked themselves, what if we could find a set of quant trading strategies which have been used in other markets like equities and commodities and FX for a long time, successfully, in some cases going back to the 1970s, and bring those into crypto so that we can take advantage of the much more extreme performance characteristics that we see here. So for instance, to systematically extract trading alpha from all of the noisy price movements up and down that we see day to day. And not only that, but do it in a way which is coherent based on underlying mathematical principles, which is repeatable and which is scalable. And that was the central idea underpinning Hilbert 6 years ago, and it's at the core of what we do today. So Hilbert is a NASDAQ-listed asset management firm, and we specialize in systematic trading of cryptocurrencies.
Good morning, everybody. It's humbling to see so many of you here after a big night. Actually, it's funny being with you guys on Coinbase. There's a very key moment in my life, March 19th, 2015, where I was on the West Coast with a big bunch of UBS executives. I was at UBS O'Connor, the hedge fund unit back then. And we went out to Silicon Valley to see a bunch of what's going on, what's new and exciting in Silicon Valley. And among all the different companies that we met, there were 2 that basically changed my life, and one of them was Coinbase. We met with Fred and Brian, March of 2015, before Coinbase was really in the public consciousness as much as it is now. And it was that moment that I was like, right, this is the direction I have to take my career. So it's all down to you guys. All roads lead to Coinbase.
Pleasure.
The check's in the mail. So now I find myself, after 16 years in traditional finance and actually nearly 9 years in this space, running Deus Ex Capital, or Deus Ex Capital Victoria, which I think is a much better way to say it. We're a $1 billion fund. We have private equity investments. We have venture capital investments, including Hilbert. We're a shareholder and a board member of Hilbert. We do venture build, so we build new companies in this space. We allocate to funds, so we're an allocator to asset managers as well. So it's a really interesting purview and view across the space.
Thanks all. So let's kick this off. I think in the seats you have today, it'd be good to know, like, what are you seeing institutional investors do, and then what's holding some of them back? So Jasmine, maybe if you want to kick that off.
Yeah, so we get this question a lot, right? So institutional, when is it coming? There are many different definitions of institutional investors, and we'll just go through that quickly. So you're a wholesale kind of, pension funds that like to only invest in funds, all the way through to institutions that look after your own wealth management, high net wealth family offices. So your big banks, all the way through to your smaller places. None of them are the same. They're very heterogeneous, but a lot of them have some similar kind of hesitations. One, just not understanding the product. Two, volatility. Three, kind of, whilst there was a beta thesis that this was an inflationary kind of proponent to hedge their portfolios, where is that beta thesis now? Sort of the operating systems and everything that need to come to light, and the headaches of just bringing on new risk and new measurements, new valuation policies, new execution policies, new cyber. So a lot of it just felt like there were a lot of hurdles for people to get through, and we handheld a lot of people through that. And when they were comfortable, because of the high octane kind of nature of it, they would end up putting in $20 million, $30 million. And we're like, it's not really a lot for a fund. We can't stand up a private fund for under sort of 150 million. It's just costs are too prohibitive. So then the costs became prohibitive. And we sort of stepped back and went, how do we fix all of this in one go? So we've kind of started to think through that, and we'll talk through that in the next sort of question.
What's holding institutions back? I'd say less and less. From our kind of narrow perspective as a crypto hedge fund for institutional investors, we saw a good acceleration in adoption in early 2022, and you just needed to look at the number of pensions, endowments, consultants that were really starting their work in terms of evaluation, underwriting, and actually starting to deploy into some funds. Of course, this year, that segment generally has taken a big pause for obvious reasons. But as we move forward together into 2024, if Bitcoin ends the year as the world's best performing asset class again, and we get closer and closer to the spot ETF and the programmed Bitcoin halving, improvements to accounting rules for US corporate balance sheets, that's going to be a very, very big pull into Bitcoin and the asset class generally, and the willingness of institutions to do that work and find the right types of access points in terms of vehicles and solutions that work for them and their mandates is just going to go up. And of course, added on to that, we're now in a world in the US and globally where there's a higher risk-free rate of at least 5%. So a lot of the institutions that we're speaking with are scrambling around now looking for ways to increase returns in their portfolios. And the crypto asset class is one of the few spaces that they can reasonably expect that pull up in returns.
Thanks. So Tim, we talk a lot about institutional adoption, institutional momentum. Why is that important? Why are we sort of numerous panels talking about this? And just in your lens, why do we think it's key?
Well, there's another way to ask the question, which I was thinking about over the last few days, which is why is everyone so het up about this ETF story, right? Like, why is the entire world apparently waiting for the SEC to approve an ETF? And it feels like such a meaningful moment in the space that will happen. Why? And actually, the answer is not that we think there's going to be this really material deluge of capital into that alone. That has always been a stepping stone, into really the vast number of access products that currently exist in traditional finance. And so I think if you look at where we are in the cycle, we were talking about this on another panel yesterday. Like this bear market has very particular characteristics, and it's specifically that it wasn't really a crypto bear market. Like this was a bear market. There's really a macro all asset bear market, and the crypto markets were tripped up by rates and inflation and then sort of funding dynamics in markets, and that caught a bunch of people out, and they got carried out in stretches. And now here we are at the sort of the one would hope at or near the bottom. Let's just hope. I'm not calling it, but and what you hear consistently is that there's this very large wall of what I'll call institutional money, but really it's the sort of wealth management money. Let's put it in that category. Like you remember there are large multi-trillion-dollar wealth managers that basically don't, for the most part, give access to crypto products in a very significant way. But you talk to those players and they will tell you that their clients want that access. That's back to the ETF thing. Like anything that gives them access is really where we want to go from here. So I think the importance of institutional adoption is that it can't be a retail-led move from here. It's just actually impossible. We've already kind of crossed the Rubicon into the number of day traders and sort of retail-based traders that come into this space. What we're now touching upon is this next big leg up of trillions of dollars of assets that just want access to different risk profiles. And that's going to be game-changing. And what that constituency expects, and this is the part that a lot of more sort of fervent crypto players find it hard to really accept, because there's this sort of libertarian ideal that everything's going to be decentralized and therefore everyone's going to have sovereignty of their assets and all this stuff. And the truth is, it's definitive now, because we can just look back at the recent history, is that wall of money won't accept that model. That wall of money wants the risks of the asset class, but not the risks of engaging in the asset class in the complex way in which it currently exists. And let's face it, it's rubbish right now. But there are companies and there are innovations that are going to afford that move in a secure way, and that's really what this is all about. This is a fascinating moment in history.
Thanks. So taking that further, and as we look to the sort of future, what are service providers going to have to sort of support, build, create in order to sort of meet that demand and link that maybe into that sort of more dedicated portfolio, which I think you touched on earlier, Jasmine?
Yeah, absolutely. So, in addressing each of those points, we're sort of like, okay, if this space has too much volatility, how do we help people understand how to sort of dim that down? And one way is dilute it, which is pretty boring. But there are an incredible number of well-tried strategies in TradFi, such as trend, where you're long on the way up and you're short on the way down. So you're making money in both cycles. That is very appealing because it changes the whole beta thesis. People are just in it for the actual trading aspects of things. And then people are like, okay, well, that sounds great. You're trading 5 tokens, but we are so long-matic already. Can you take that one out? And we're like, okay, guys, we can't personalize things in private funds that are commingled. It's just too expensive. So we went, okay, why don't we do this? We'll set you up a Coinbase Prime account, and we just do the trading instructions straight in your account. No auditor, no admin. We remove all of that 80 basis points of fees. We just purely trade exactly what you need. And we thought, actually, that works so efficiently. We could do this for $10,000. So what we've rolled out now is a platform. It's an SMA platform, so separately managed funds. You don't have account like an SP or like a new Cayman vehicle. You have your account and you have sub-accounts. And you can say, that strategy, here's a drop-down menu of 50 different strategies from very high quality people like Hilbert, doing a lot of the work for you. Instead of you holding this one, passive strategy, you can now amplify your returns and get closer to alpha or actually get pure alpha. So what happens is the trading instructions just come in and they work on your account. That means none of your assets leave your account. So the trust factor is completely gone. Well, trust factor is high. The security is super high as well. Your costs are only your costs. So you're not sharing costs that people are coming in and out of a vehicle. You're not sharing that, which is one of the biggest things about an ETF. If you're a long-term holder, they're paying for people coming in and out of those structures all day. So that's not an efficient way to be a long-term holder. So you want your own account, hold the tokens, have it traded in a smart way for you, and then have a look to see all the different strategies that are available to you. So we're rolling that out in the next couple of weeks, and look forward to getting any of your sort of feedback on that too.
And picking up on that, the reason we're excited to be partnering with Coinbase is because it's going to enable a broader set of clients to access our trading alpha in a format which is secure, transparent, and flexible. That solves a problem for us in one regard. So when I first came into Hilbert, was looking at the different markets that we could approach in terms of clients. And I thought, well, how about India, for instance? There's very deep pools of wealth in India. So I phoned a friend who's based there. He's very well networked and kind of outlined what we do. And he said, you don't stand a chance. I thought, oh, maybe I pitched him the wrong way. But he said, no, it's not that. I think what you're doing is very interesting. It's just because of things like tax and capital controls, your Cayman format just won't work here. So being able to offer our trading strategies in the Coinbase SMA format, because of its structure, because where investment decision making is made, that market is now available to us. So that we're super excited about that.
So I'll give you a quick analogy. So after 25 years of managing different people in fixed income, all their trading is treasuries and rates and FX. And you've got 200 different traders, and you're like, how is it possible that they all have completely uncorrelated returns with the same 3 ingredients? And they just do. And so this is called alpha. It's like handing 4 different ingredients to incredible chefs. You can hand them flour, milk, water, and sugar. They'll all create incredibly different things. And so we're creating a bakery, basically, where you can come in and buy on a drop-down menu access to what are very uncorrelated returns from very intelligent people bringing this to market in the lowest cost way you can do it.
And just within that structure, then of course, in terms of the underlying, what we ultimately need to deliver as a hedge fund to investors, what they expect from us is we need to make them money and not give them any bad surprises. So we at Hilbert, we're a risk manager first, crypto investor second. We approach operational risk management as if our lives depended on it. And when we look back over the last 6 years and 2 crypto winters, it's absolutely mission critical to get the operational risk management done extremely well. And then there's an abundance of trading and investment opportunities to take advantage of in the crypto market. So making money, no bad surprises, and a fixation on operational risk management. That, by the way, is not specific to crypto. Before I was at Brevin Howard doing macro, it's the same ingredients that are needed, Finisterre, emerging markets. For any alpha strategy to be successful, it needs to deliver good returns and have very good risk management processes.
So is it just to sort of maybe take that one step further, Richard? What else should people be thinking about when looking to appoint a third-party manager, or why should they be thinking about that if they're looking at dedicated portfolios in crypto?
I think in general, when you're outsourcing management of a portfolio of assets, I think 3 key things: a coherent investment strategy, coherent and repeatable way of making money, operational risk management excellence, and then the highest levels of integrity with experience. In this kind of frontier ecosystem, those things really stand out. I remember being at a conference last summer, crypto conference, sat in a small booth where they speed date managers and allocators, and it was late into the afternoon. It's gone 5 o'clock, and an investor came over, pulled up a chair. She looked absolutely exhausted. We were her 17th crypto manager date of the day. And she settled and then looked down at our one pager and said, "Oh wow, you've got an audited 5-year track record." I was just with 2 young guys over there. They're really nice guys. I'm super keen to invest in the asset class, but I can't reasonably take those guys and show them to my CIO because they've got no track record. They've not managed $1 of external capital before, and they've never faced a market crash. And there were hundreds of people with mixed levels of experience launching funds in the crypto market, last crypto bull run. Many of them didn't make it. And when we look into some of the portfolios of our institutional investors, it looks like there are only about 25 to 30 institutional grade investable crypto hedge funds available globally. And the things that they're looking for, the things that our investors tell us they value in Hilbert, are those 3 things: coherent investment strategy, the highest levels of operational risk management, and integrity with experience.
Thanks. So how, Tim, how, as we look forward, how should investors be thinking about the next 12 to 24 months, emerging trends, particularly when you're thinking about portfolio construction and what might be happening? Obviously, that's a bit of a view to the future, and we won't hold you to any price predictions either.
Look, it's funny, I was talking with someone last night and they reminded me of, you get these sort of traditional adages that you forget when you're in crypto for a while. Like, the bear market is the time to buy, the bull market is the time to sell, is sort of the basic adage. So you didn't really want to be buying in September of 2021 at the height of the bull market, right? You definitely want to be buying now, right? And so I think number 1 point is the opportunity set, and it's vast. There's metaverse, there's the whole NFT side of it, and that's evolution. There's the integration with AI, there's payments, and then you've got all the kind of institutionalization that we're talking about, and we haven't even touched on tokenization of securities and new rails. Like, there's a vast amount of things going on in this space. So number 1 point is that there's a huge opportunity set, and now's the time to engage. The second point is it is very kind of aligned with the theme of institutionalization. If you, like, the litmus test as far as I'm concerned, and if I'm looking at a manager to allocate to in crypto, is if they got caught out, with the exception of FTX, which when I was at Galaxy, we got caught out by FTX, and we'd have considered ourselves very good risk managers. And I think that was just fraud. So you kind of have to take that aside, because everybody got caught out on FTX, and that's a cautionary tale that will sort of last forever. But really, all the other blow-ups, Lunaterra, Celsius, all these other companies, like at Galaxy, we did not get blown up by those. Why? Because we have classic old-school risk management skills. We know trouble when we see it, and we never invested in DCG, and we never invested in Genesis, and we didn't have those relationships to lose money against. And a lot of people did. And you look at managers, and Hilbert's a great example. You look at managers, if they got caught out by anything, fail. Like, you generally should be able to navigate those kinds of waters. And there are really good managers that have done that. And I think that risk management element kind of brings you to the final point. Like, what is it about risk management that's so special? Well, it's traditional. And it's also having this, it's interesting actually, one of the themes of the discussions I've been having with people over the last 48 hours, because this is my first time I've been out on a conference in a while, so it's great to sort of re-engage with everybody and talk about what are we all seeing and feeling. It's actually, to me, a refreshing moment that I wasn't sure was going to happen this soon, and I'm kind of happy it's happening, is that there is this sort of, finally, this realization in crypto that you have to embrace a lot of the things that actually work in traditional finance. You can't throw the baby out with the bathwater and say that traditional finance is rubbish and crypto finance is the future. The truth is, at any given time, there isn't a crypto finance and a traditional finance and a DeFi and like a CeFi and all these sort of odd monikers that we've had to generate. Like, there's only Fi. At any given point, there's only one financial system. Today, there's one way to access risk. There's one way to distribute your capital. Tomorrow, there'll be an evolved one. It isn't that there are different systems. And so I think the exciting part is now we're moving into this reality where we're going to take the best of both worlds. And somewhere in the middle is the right answer. And I think when you take the overlay of traditional roots, risk management, operational risk management, governance, transparency through being publicly listed, all this stuff, like that's all tried and tested, it works, and you combine it with all these fantastic tools and new risk profiles that we have, that's when you've got an entirely new and exciting asset class, and that's where we're going. So it's good to sort of lean into that, I think.
Thanks. So we did leave time for questions, but I'm not sure if there's a mechanism to actually do that or not. But I don't know if anyone has a question, and we might be able to get someone to facilitate that.
Do we have any questions from the audience for our esteemed experts? Just put your hand up and I'll do some comedy running just to spice things up a bit. I'll try not to fall over too many times. Yes, we do.
We appreciate it's early. And
Okay, good man. Could you introduce yourself to the room, please?
Hey everybody, my name is Steve. I have educational content on TikTok, Instagram. Thanks William for your talk so far. My question is, what are the top assets that these institutions are looking at in terms of the top 5 cryptos maybe?
Jasmine, do you want to start with that, or?
Yeah, so some of them are just purely after a Bitcoin Ethereum mix. I mean, we've gone through the wave of, is Solana going to be the Ethereum killer? You know, Vitalik has proven his team can deliver in upgrading, making it more efficient, and you know, being the dominant player. What we're going to be seeing soon is more VC L2s and potentially layer 3s. Because you know, there is such a quest here for tokenized product, but these people need permissioned private chains. So if you're building off a Matic or if you're building off Base, you can do like a little node off that, so that when you're comfortable bringing yourself back down to a public chain, you've got that instant access and you're very EVM compatible already. So we're seeing a lot of layer 3s come to market, a bit of investment there. But in terms of liquid strategies, that is definitely the main area, because VC, whilst there were 3 issues with VC. People got into it saying, look, you know, I can allocate to private capital, I've got that line item. But what happened is they ended up getting liquid tokens, and they're like, what do I do with these liquid tokens? They're in lockup for a year, so that's fine. What happens when that lockup comes out? And they're like, oh, I can't even custody this. What do I do with it? And so there are a lot of questions, a lot of headaches that people went through in the VC kind of space. So liquid trades with the most liquid top 5 tend to be like invariants of it, like what Hilbert's doing, you know, in, out, looking at different MEV. And we're seeing the fundamentals of like what's happening in these chains underneath the blockchain and the actual price. There was no correlation, and we're seeing that gap start to dissipate. So yeah, it's got more fundamental kind of proponents to it now.
I think actually it's a very interesting question when you think about it, right? Well, your basic question is, tell me 5 examples of tokens that you think are going to go up, right? It's interesting when you look at like the statistics. I believe the statistics are that there are more holders of crypto than there are of equities in the world, which is a really odd, if you really put your mind around it, like it's an odd concept. And it can't be that those people all have a really solid understanding of the fundamentals of the coins and the layer 1s and the layer 2s and the infrastructure and the risks. They can't. It's impossible, because that's a professional's job, right? That's how big this space has become. That's how complicated this space has become. It's how important this space has become. So I think we're going to evolve to this sort of new reality where you could ask that question, and I think there are people that will always... and they've, because they've identified themselves, we have identified ourselves as the people that are holding crypto in a sort of very, call it a degen manner, and more on that side. I think that's topped out. I think that's only so far that can go, right? Like that group's already sort of off and running. The next level is you don't ask what the top 5 equities are. You don't really hear people saying that, right? Like, what are your top 5 ideas and equities? You generally would pay someone with the skills and the track record to manage your money when you're doing that. And I think that's the crux of everything that we're talking about, right? We're going away from the 2017, like, tell me what the latest ICO is, which is really just sort of a version of what you just said, to give me a really sort of rich view of the risks, but you go figure it out for me and I'll pay you a fee to do it. Like, that's the reality, I think, of the transition that we're in right now.
I think we're at time, but do you think we could do one more question if there is one?
A quick question. Oh, listen, I've got a question. Stephen, nice to hear of Irish accent there. Where will we find you on TikTok and Instagram? What's your handle?
Steve teaches crypto, pretty basic.
Steve teaches crypto, you got it there. Okay, quickest question. We are counting down the seconds here. Quick question, gentleman with the hand up there. Okay, what's your question, sir? Please introduce yourself.
Dr. Leonard Anderson from Convex Foundation. I'm a little bit older than most of the people here, so it's a factor that people are important. But is there any ageism? Do we need young, fresh founders, or can old, crippled people with experience be considered as being reasonable founders?
Well, that was kind of my point, right? Like, if we let a bunch of young kids run around running the place, 2022 happens. Like, that's just, I don't need to prove it to you. It's literally just happened. And you need to combine that with the grey hairs and the experience. And by the way, I'm a bit older than I might look. Like, you know, I was there in the crash of 2000, right? Like, you've got to see that stuff happen in order to know how to navigate markets. Like, if you don't, 2022 happens. You get paralyzed when liquidity crunches happen. So I think the answer to your question is it's not that is there ageism. Like, you have to have that combination. You also, by the way, can't have a bunch of more old, stuffy, traditional finance people running the place either, because they're not necessarily like qualified for that. Like, that's an old 20th century model, by the way, that we're trying to change. The sweet spot is the experience, the wisdom of the kind of older cohort, and the energy and enthusiasm and the lack of baggage with the younger cohort. You smash that together, bit of pixie dust, and boom, Coinbase croissants, their bakery.
Thank you. Just any final comments before we wrap up, because we're going to really probably get taken off the stage.
Yeah, so we have the ETF market. Everyone's excited about it coming on. I will say, be careful about ETFs, though. Make sure you're looking at the costs. The ETF market in general for the entire ecosystem is 7 trillion. Mutual funds is still 40 trillion. Right? So if you think about the main promise of what blockchain's doing, it's not about just trading Bitcoin and everything and all of the different things we're going to be adding in tokenization. Finding mechanisms to really personalize your portfolio and have it traded for you are just some really innovative things that digital trading can provide us. So.
Thanks to the panel. I think we can all give them a round of applause and enjoy the rest of your day. Thanks.
Wonderful stuff. Pixie dust and Coinbase croissants, absolutely fantastic. Oh yeah, I'll grab that. Thank you. Yeah, just stick the mics on the chairs. You are all good there. Thank you.